So you heard about Forex chart patterns, but there are so many Forex chart patterns that you can learn. So in today's video, I want to show you the top 3 Forex chart patterns that every beginner should trade. These are the 3 Forex chart patterns that I would focus on if I'm new to trading and I do not have the capacity to study everything, or you just want the top 3 that works as well as it's the easiest to implement. So that's the goal of today's video. Now, just a quick, breakdown of what I'll be covering today. I'll show you the top 3. The number 1 is actually the ascending and descending triangle. Then I'll go on to the false break, and the last one that I want to talk about is the tightening of volatility. Okay, in each of these chart patterns, I've actually previously recorded, details on the specific steps on how to trade all of this. Okay, so each of this has been recorded before. So this is more like a summary. So I will not break down the full step-by-step process of how to identify them, how to trade them. I'll just give a summary. But what I will do in this video is that I will leave a link at the top right so that you can watch the video. After you're done with this, you can watch the relevant video to find out how to trade each of these Forex chart patterns. Now, if this is the first video that you are watching in our channel, then this is what I always say when it comes to chart patterns and indicators, okay? The first thing you want to know is that you never use chart patterns in isolation, okay? You do not just go out and see every single, for example, ascending triangle or head and shoulders pattern, or, anything, any chart patterns, and just blindly buy or sell, okay? That's not how you do it. Trading is not so simple, okay? You need to perform a complete analysis, okay, such as identifying the trend, the key levels, if there's any news event that might affect your trade. Okay, all this is actually covered in the 3-day trading guide over here. Okay, let me just draw it for you. All this is covered over here. So it's covered over here, okay, in the 3-day trading guide. So just check the description for the link, okay, to download it, just in case you do not know how to perform a complete analysis. But in today's video, let's move on. I want to start off by sharing with you what is an ascending triangle. Ascending triangle, there are specific criteria. Okay, I'll just run it through with you quickly. So what you have is that in an ascending triangle, you have a resistance level, okay, and price is coming up, and there's one touch, okay? It's very important that there are at least two touches. Okay, again, this has all to be spelled out in the other video. I'll leave the link in the top right. Just check that out if you do not know how to identify ascending or descending triangle. After this portion, I have a screenshot for you as well. So make sure, so I'll just go through that, and you can just have a look at how it looks like on the chart, okay? So this is the second touch, and it comes back up, and then it goes back, comes down, and then it breaks up. So basically, you have a form of a trend line that you can draw. Okay, sorry about this. Let me just redraw. It's a bit ugly. Okay, let's say something like that. Okay, and this is the resistance. Of course, it doesn't have to be perfect. And the main thing that you want to see is you want to see that there's a form of a trend line or a moving average that is building up, meaning that the lows are getting higher. So at first the low was here, and then after that the lows coming here, meaning that the buyers are willing to buy at higher price, and then the buyers are stepping in again and again. Okay, so this is ascending triangle. So of course you buy when price breaks out, and you just put your stop loss below the recent low. That is ascending triangle. The descending triangle is just the opposite. You have a downtrend, and then you have a you have a support over here. Okay, let me just redraw it so that's clearer. So price is coming down, you have support, it touches once, it touches twice, and it slowly bounce off, and then it breaks. So it touches once, at least twice, okay? The minimum touches that the price has to hit the support will be 2 times. Again, I explained this in the other video, okay? Link is in the top right, just check that out. So what happens is that you do see that there is a price is selling down, so sellers are coming in here, and then after that sellers are coming in here and sellers are coming here. What they are doing is that they are essentially trying to squeeze out the bears. So this is how a descending triangle looks. So let's go into the charts, and let me just show it to you how it looks like just pictorially on the charts. So you can see over here that this is ascending triangle. Okay, this is ascending, this is a descending. So you can see that the lows are here. After that, the lows comes here, and then the lows comes here. So you can see that buyers are coming in, stepping in to buy. Buyers are stepping in, and buyers are stepping in. Okay, a quick tip is to just draw a trend line and then watch for the trend line to be respected. Just look for clues about whether this trend line is being respected. Okay, the same thing is true for the opposite. You have the sellers coming in here, then you have the sellers coming in here, and then you have the sellers coming in here. Same thing, the trend line is being respected. So as a rule of thumb, you want to see that the trend line is being respected as the price attacks the support or the resistance. Okay, of course, in the ascending triangle scenario, it's the resistance, and in the descending triangle, it's the support. Okay, this is a very beginner-friendly way to trade. Okay, this is one of the best chart patterns that you can use. Okay, in fact, in one of our videos, we say that if there's a best singular Forex strategy, it would be trading breakouts. Okay, I break out. I go into details as to why a breakout strategy is the best strategy for a new trader, because from the psychological standpoint, it's easy, right? The moment you click the trade, you see that you're in profits. So it's easier on your psychology. Right, if you want the full details, just go into our YouTube channel and type the best Forex strategy, and you should find that video. That video I break down why you should be trading the breakouts, especially if you are new. Okay, so by the way, if you are new to our channel, right, really appreciate if you could just take 3 seconds of your time to hit the subscribe button and turn on the notification bell. Okay, please like the video as well, right? We are on a mission to impact 100,000 traders, and we are recording a new Forex video almost every single day. So you do not want to miss any of our videos, right? All our videos, we take a lot of time to prepare it, and these are lessons which we paid a lot of money to learn, and we are making it all free for you. So just go ahead and hit the like button and hit the subscribe button. Okay, have you done that? Okay, thanks for doing that. Now let's move on. What is a false break? Okay, again, we have other videos on this, but a false break is a very simple concept, meaning that let's say you have a resistance. Okay, let's say you have a resistance, and instead of price breaking up and going retesting it and go up, what it does, it just breaks down. So this is what is known as a fake out, because instead of breaking out and going out, it breaks down. So a fake out or false break is what it is. This is what it is, and of course, in the opposite case, it's the same. Let's say price has been like that, has been ranging between this support and this resistance, and you expect price to break down when the support is broken, but instead of breaking down, price actually goes up. So this is a false break. It is a very powerful way to catch a low risk, high reward trade. Okay, again, this has been covered in the other videos, but here is just an example of how it looks like. So you can see this is the bullish example, and this is the bearish example. So you can see that this was support, and this candle over here closed below the support, but immediately it started rallying. So this is a bullish false break, and in this case, it's the same. You have resistance over here, R, okay, for resistance, and price breaks above this candle breaks above the resistance, and after it breaks, it starts selling down immediately. Okay, so this is another very powerful concept. This is something that as a beginner you want to focus on, because imagine if you entered somewhere here and you just put your stop loss here. Okay, your stop loss is very well defined because you know for sure where to put your stop loss just after the candle, and you could potentially make a lot of money if you even if you just target the recent low over here. So your risk would be something like this, and your reward will be here. So you can see that the risk to reward is very lucrative. So this is one of the chart patterns which I recommend that you focus on if you are new to trading. Okay. Now, the last one is what I call the tightening of volatility. So let me just show you how it looks like. Just draw it out for you first. So what you have is that you have an expansion, meaning that price is moving really fast. And after that, it starts consolidating in a tight range before it goes back up. So the opposite is also true. You have a price expansion down, and then price starts consolidating in a tight range, could be something like that, and then it starts breaking down. Now, there are two ways for you to visualize this. You can see it either by an inside bar or a Bollinger squeeze. So over here, I mentioned that what you see is either inside bar or a Bollinger squeeze. So on the left over here, you actually see an inside bar. Let me just write it. And here you see a Bollinger squeeze. So let me just run you through each of them. Just a brief one, but just another gentle reminder, all these are being provided in the other videos. I just want to do a summary of all the best Forex chart patterns that you should be focusing on. So you can see inside bar, price has been moving down, and after that it starts consolidating in a very tight range, and then it breaks down. Okay, so remember earlier on I drew this pattern over here. So this is actually the inside bar. So you can see that price has been really moving, and then it starts consolidating before it expands. So basically the volatility tightens, and after a tightening of volatility, you expect price to extend. Just think of it like like a rubber band. If you squeeze it really tight, you pull it really tight, it's going to explode. Or like a spring. Okay, a spring would be a better example. If you were to pressure it, apply pressure on it, squeeze it tight, like in this case, this is like a spring. What happens after that is a big movement down. So this is another good chart pattern that you want to focus on, because if you are able to enter the trade over here, you can have a very tight stop loss and you can catch a very nice movement down. Okay, the inside bar is not very easy to identify. Again, the other videos that I have talk about this concept. But if let's say you struggle with this, right, then the other solution is use the Bollinger Squeeze. Right, what you want to do is you want to have the Bollinger Band, and you want to watch for the upper and lower band. You can see this line over here. This is the upper band, and this is the lower band. So if you compare the charts, look at this portion, you can see that the bands are quite wide. The distance between the upper and the lower band is quite wide. Okay, you can see. But when it comes to let me just click. When it comes to this portion over here, you can see that the bands are tightening. The distance from the upper band to the lower band is very tight. So this is what is known as a Bollinger Squeeze. So normally after a Bollinger Squeeze, you will see price take off, because like I mentioned, it's like a spring. When price has been compressed, it needs to move. After it's been compressed, it needs to explode in one direction. So this is another powerful chart pattern that you should focus on. Okay, again, if you cannot identify this, because this takes a bit more experience, then go with the Bollinger Squeeze, because this one you just put on the indicator, and you can kind of just look at the distance between the upper band and lower band, and it's quite straightforward. Okay, so before I do a recap, I just want to go through the disclaimer one more time. It's very important that when you are trading chart patterns, you do not trade chart patterns in isolation. Okay, please do not use whatever I covered in the wrong context. Never ever just use a chart pattern. You need to do a complete analysis. Do not start going on the charts and start finding every single ascending triangle or descending triangle, every single false breakout and every single inside bar or Bollinger Band squeeze and start trading. Okay, that's not the way to do it. You need to do a full analysis. Okay, our 3-day trading guide already gives you a step-by-step guide, but a lot of our other Forex videos gives you a step-by-step guide. So if you need that, check that out. Okay, please do not just blindly enter. Okay, that's very important, because I do not want you to lose money. Personally, I've done that when I first started and I lost a lot of money. So I really do not want you to lose money. So please take note of this. Okay, so as a recap, in today's video, I shared with you the top 3 Forex chart patterns that you should focus on. If you are a beginner, okay, these are beginner friendly. So the first one is your ascending or descending triangle. So ascending triangle is of course when you are trying to buy, and descending triangle is when you're trying to sell. Basically, this is a breakout trade. Okay, let me just write it out. Breakout trade. Then I talk about the false break. So basically, you have price, ranging, and instead of breaking up, once it breaks support, instead of breaking up and carry on trending, it goes back down and it starts selling down instead. Okay, the opposite is also true. You have like that, and support, instead of support breaking and price dropping further, it goes back up. Okay, that's a false break. And lastly, I talk about the tightening of volatility, which can be visualized either by the Bollinger Squeeze or the inside bar. Okay, stick to this one over here if you do not yet know how to identify the inside bar, or you struggle with just identifying it. Okay, as always, if you have any questions, we'd love to help you. Just leave a comment down in the comment section. Our team will read the comments and do our best to address your concerns. If not, make sure you like the video, make sure you hit the subscribe button so you will not miss another video that we create. Okay, check out other videos in the top right. I'll leave the link to all these chart patterns and a step-by-step guide on how to trade it. Okay, if not, thanks for watching. I'll see you in the next video.